Oh, guys.
Holy moly.
What?
Spot price is 2082. You're going to see 2400 gold next year. At some point, you're probably going to see 33 to 35 silver. Leave all the trauma behind. This is it. Like
This is
th
it, huh?
this is it. You've been waiting for this for 11 years.
The worst day on Wall Street since the crash of
We're
1987.
now down 43%.
This could be the most serious recession in decades.
Protect your retirement with a gold and silver IRA. Learn more at sdbullion.com/IRA.
Gold just broke an all-time high. Is silver next? And are we setting a new floor for the price of gold and silver? Now, this video is being recorded on Friday, December 1st, so don't hammer me in the comments if something huge to the downside occurs before I can drop it. But something big is going on here. Is it a new trend? Well, let's bring in one of my favorite gold and silver experts to find out. Hi, Lior. Great to see you.
Great to be here.
Gold and silver, buddy, on a tear. In fact, we just broke all-time highs as of this video right now. How about that?
Yeah.
That may not be welcomed by some new stackers just getting into gold and silver, but it is amazing. Let's just rewind just for a second. Since the lows in early October, gold has been up like 12%. Half of that was over the last 3 weeks alone, 6%. In the same time period, silver up over 20%. Almost 14% in 3 weeks. So please dissect this for us, Lior. What's going on?
As October came rolling by, there was a consensus that the Fed will sneak in another rate hike. And that rate hike is really what discouraged the gold sector. And what happened on November 3rd is that the FOMC meeting confirmed that all of the market's speculation regarding a rate hike and regarding more tightening are totally nonsensical. And the Fed basically said, we are done raising rates. Now, they don't say that outright. What they say is that the risk of more hikes is similar to the risk of not cutting. In other words, we are at the peak of a mountain and we can, the wind can tilt us here to over tightening, and it could tilt us here to recession. So we're now in a wait and see period. And ever since that time, the Fed's projections on when the first cut will come started in June. Now it's in May. And now the Fed projections are for 3 rate cuts next year and not 2. So that has dramatically shifted the bullishness and the pricing in of higher gold prices in advance. So now we have the consensus is May is the first rate cut, and by the end of the year, rates are going to be at 4.5% or 4.25, which is very normal and really good. If you look at other times that we've had extreme loosening of financial conditions, both in 2010, in 2016, 2018, and 2020. Those are the times that gold has erupted. And that's what we're seeing right now. I'm loaded to the gills on gold.
I want to take a few minutes to talk about the resource sector, Lior.
Okay.
And just give you a little backstory. Mrs. Yankee and I, we've been in real estate for over 15 years now, primarily via private mortgage lending. She knows all about that. She knows all about my silver and gold stacking. Mrs. Yankee is all in on precious metals, primarily to protect our wealth, but she understands it. She recently asked me something. She asked me to break down what I'm speculating in with a small portion of our portfolio to potentially boost it a lot. So I said resources. I said commodities, gold and silver mining stocks, uranium stocks, food and agriculture, wood. I'm even considering lithium. Have we officially turned the corner on the resource sector?
We have. On November 3rd, the entire investing premise that held up since 2011, since the market shifted towards deflationary investments. So tech, Nasdaq, growth, anything that is based on very muted inflation and cheap credit, cheap money. It's that those stories are out of the window. Over investing in growth is done. We're back. We're getting back to the roots, to normal, which means that during this period, from going from over tightening to normal, you're going to see a dramatic loosening of financial conditions, and that's extremely bullish for gold equities, just like in 2010 and 2011, and just like in 2016, 2018, and 2020. But mostly 2010 to 2011 resembles this time. And by the way, I forgot to mention, I created 2 special reports on gold stocks for next year, just for your viewers and listeners. If you download these are 5 to 6 million reads over the weekend. You will be up and more knowledgeable than 99% of investors in this sector. wealthresearchgroup.com/boom. Not the type of boom you see here in Israel, but a good boom. And wealthresearchgroup.com/2024, because 2024 is going to be a tremendous year. Tremendous year. Okay, this is a time to be a hog, a pig, regarding this sector. When you fragment the global economy, especially commodities, you are in a commodity war between countries that are aligned with China. So China is going into Africa. That's why the Wagner Group is going to Africa. They're trying to secure sources of cobalt, nickel, lithium, uranium, etc. The United States, for the past 30 years, has lived in la-la land. We have no enemies. No one can disrupt our hegemony. Let's just kumbaya and give everybody else the chance to sell us commodities. We don't need any mines in America. Let's talk reality. There's one negligible uranium mine in the United States right now. That's it. The rest is imported, and much of it comes from Russia. Nickel, critical for EV batteries. There's one little mine, low grade, and it actually exports its low grade produce. Lithium, one mine, and the second mine that's coming online in 2027. You know who owns it? ExxonMobil. The king of fossil fuels is getting into lithium. All it means is that you're going to need to invest a tremendous amount in resources, in commodity, in infrastructure, in industrialization, because you have to move those factories and lower your dependencies on China and on Russia and on countries that you just don't have the luxury to trust anymore when it comes to getting your goods on time.
Let's get back to physical gold and silver, because Lior, this is my passion.
I have to look at my phone. I have to see if it's 2100.
Okay.
I have to.
Oh, guys.
Holy moly!
What?
Spot price is 2,082. And by the way,
oh my word,
none of these CNBC clowns are talking about this. So this tells you how real this is.
Okay.
They're not even putting a 5-minute segment on this.
That's par for the course for these.
If you remember, when the pigs, Portugal, Ireland, Greece, and Spain, when they were falling apart, and gold was on the front page news every day. It's 1700s, it's 1800s, 1900s, 1963. You could have sensed that it was the end of a boom. Now you don't sense that at all. Nobody's talking about gold at an all-time high in 80 fiat currencies, including now the largest fiat currency.
Are we going to see a floor built at 2,000 gold, maybe $25 silver?
For sure. I mean, you're probably entering a record year. You're going to see 2,400 gold next year. At some point, you're probably going to see 33 to 35 silver. You're going into a phenomenal year.
Wow.
This is 2024 is going to be the best year for gold and silver since 2010. It's going to be an incredible year. People really have to leave all the trauma behind. This is it. Like this is it. this is it. Well, I think gold will hit 2,300 at some point next year. Yeah. I don't mean that it will end the calendar year 2,300,
Right.
but at some point, I think we will be at 2,300. Just so we're on the same page, 2,300 is a 15% move, and actually from here it's a 10% move.
Amazing.
So it's nothing big. You need to be. This is the year. This is the year. This is the year. You want to buy gold? Go and make your 10%. You want to be part of history. You want to have a religious experience. You want to find God. The GDXJ is going up 100%, 150%, and it could be a matter of months. Look, in 2016, when I first started to publish Wealth Research Group, one of the first viral things that happened was we realized that the Swiss central bank was buying mining stocks, and we released their top 20 holdings right after the first rate hike from 0 to 25 basis points in December 15th, 2015. So we're coming up on the 7-year anniversary in less than in 2 weeks from now.
Cool.
So that rate hike is what inspired me to start writing Wealth Research Group, because I said, that's it. That's the bottom for gold. Gold was 1,083 an ounce. And I said, that's it. They've started worrying about inflation. Gold's going to start rallying. People are going to think the other way. I need to explain myself. So that's how it started. Then January, February, we started highlighting our best silver and gold companies. One of them went up 1,200% just that year alone. You had a record 2016, and that was all happening while the S&P 500 was going down 11%. So what I want to tell you is, in years like this, in years like that, the GDXJ was up from January till August 150% or 180%. One of the two, but it was insane in 8 months, a full basket. So when money flows into this sector, it's so tiny. It's so tiny. Just think about the largest gold company in the world. It's a $30 billion company. It's a 1% the size of Microsoft. 1%. If you just have a little bit of profit taking from the Magnificent Seven that comprise now 30% of the S&P 500, and Wall Street just dumps 1% of their portfolios into gold-related stocks or the gold ETFs, and then those money managers need to start buying more stock because they're getting more investments into their ETFs. These things move like rockets. So let's say you take, and this is just hypothetical, you take $100,000 and you split it down the middle. Buy $50K worth of stocks, worth of mining stocks, $50K worth of physical silver.
Mm-hmm.
And let's say silver goes from 25 to 33, right? 33% move.
Right.
That 50K is now 67. The other 50K, right? Up 33%. The other 50K, you doubled your money, went to 100. At the end of the year, right? You made 67,000. On 100,000, you made 67,000. You're up 67%. Fine? Fine.
Mm-hmm.
Now let's say you take that 100,000 and you put it just in mining companies. I'm not saying that's what you should do. I'm not giving you financial advice. I'm just saying.
Right.
Okay. If that doubles, you're up $100,000, not 67. Take those 33,000 that are your alpha for doing one over the other, and buy $33,000 worth of silver for free.
Physical silver for free.
Yeah, be left with your $67,000 gain.
Amazing.
Buy $33,000 worth of. So what I'm trying to say is, it's not like you need to change your overall strategy for silver and gold. But when a year like this happens, like I said 10 minutes ago, you need to be a pig. You need to be a hog. That's your year. The only things we had during these 11 years were 8 months during 2016, 3 or 4 months during 2018, and if you were liquid during March 2020 and had the guts to do it, then buying when silver went from 12 to 25 and when gold went from 1,200 to 2,000. So my point is, now's the time. Like, be prepared, do your own research, build your own strategy, And if you can't, you can go to money market accounts and make 5%.
Well, I enjoy your newsletters, Lior. The Wealth Research
Thank you.
Group email blasts are awesome. I read every one of them. They're great.
Thank you.
I have the website right there on the screen. You mentioned a few more links. Definitely go to that. Sign up. You will get them regularly. And it looks like we are in for quite the incredible end of year in 2024. Thanks a lot, Lior. I appreciate it. It's always a pleasure.
Thank you.
Take care.
Shalom.